Good morning. This is Ron Brown. It's the 3rd of July, and I'm wishing all of you a safe and happy 4th of July. As you know, if you watched last week's video, I am working on this concept of having multiple windows to help find stocks or ETFs with using multiple methods with a VPA, with Wyckoff, etc. And this is my current layout that I'm working with right now, and I'm going to change these, or I may change these views in the future. I'm not sure. But I want you to consider this for analysis. That is, consider the layout, multiple charts for analysis, just because it gives us a greater insight. Now, what I want you to do before you install the add-on, I want you to delete my charts. Just go up here and delete the charts. And I also want you to delete the warehouse views by clicking on the Choose Create Warehouse Views. Just delete these. And then you can install the add-on, and then you'll have everything that I have. Now, I want to point out, when you get the charts or download the add-on this week, what I've added is a folder called VPA Layout Charts. And these are multiple charts. The four charts on top are the ones that I primarily use, but I've thrown some others in here because these are useful charts that I use all the time, and I'll show you that. Now, the purpose of the multiple charts, as I mentioned last week, is that we can get a different view or different input from each chart to help us determine if we're interested in a stock or an ETF. And currently I have a daily intraday chart, and if you'll look at this one right here, this just happens to be Alphabet Google, and the information that's contained in here are is the information from the VPA layout. Now, if I go into Edit Current View, go under the Warehouse Volume Price Analysis, and I'm using Display VPA Analysis in the upper corner of the chart and draw VPA flags on the chart. Now, you can turn this on or off on your charts, and this is the information that's showing along with the VPA flags. Now, on my screen, and this is a 34-inch screen, I've made this chart large enough so I can click on this, bring up the fundamental information, and which will include all of the information going to the right, includes the industry group, the PE, and so on. Earnings due date, all that information, plus the revenue and the EPS and the scorecard information. I just wanted to make this chart large enough so I could show all of that. So it's the dominant chart, obviously. With this information down here, and this is intraday from Friday with Thinkorswim. On the weekend, you can get the intraday information, and what this does is it shows the intraday price. Need to make that an arrow. The gap, the one-day change, the range, and the 20, 50, and 90-day percentage of volume compared to the normal volume. Here's the estimated volume. You can see it ended up right there because the market's closed, and the 90-day moving average volume. So you can see that going into the 4th of July weekend, the 90-day moving average volume was not is greater than the intraday volume yesterday. I put the relative strength rank, the HGSI relative strength, and the Kirkpatrick rank is not showing up here on this one for some reason, and I don't know why. But let me go down to GOOG rather than L, and it shows up. So HGSI rank, which is calculated differently than the Kirkpatrick rank. This is based upon a 30-week moving average, and this is based upon what the emphasis is on the last quarter. I'll explain that sometime in the future. I don't want to get bogged down right now. But this is all the information, and why do I care about this information is because it shows us really the demand supply. Now yesterday, going into the holiday weekend, this is not a good indication because the demand was less. You can see that everything's red here, but the price change, the gap, the one-day change, this is a percentage, this is the actual change up here, and the range. So the demand is there even though the volume is not there, but stocks can rise on lower volume too. So you have to look at this information up here to determine if there's demand, and there is demand because these are all green on lighter volume. So what does that mean? It means that there is demand. Now if you go over here to this chart right here and look at this light green line, these are the Wyckoff demand supply, or this is demand only, this chart. It shows that there is a light green line, and if I look up here, light green equals wider spread on lower volume, which is lack of supply. And that's what we have right here. Because volume is actually down, but the price went up and it closed high in its range. So this is telling us as of this day, and it's only for the day, there is a lack of supply. Now I should probably point out that I'm using the top 50, which is an excellent place to find stocks, to locate stocks, and this is the top 50 generated by the program every day. And if you go into the designer, you'll find it under HGSI top 50, and the most recent, you just click through to the warehouse view. I just happen to have the Kirkpatrick fields up here right now. Let's go to a different view. I'll just go into my number one folder here and go to scorecard end of day. And then it's sorted on raw combo with the demand end of day combo. Let's bring SOHO up. Now this is an ugly chart compared to what we were looking at prior, but let's just go through this quickly and look for demand and supply. Now I'm going to send out an invitation. I'll do a webinar next Thursday, and we'll go through more of this in detail. Like I said, this is a very ugly chart, which makes it more dangerous. But on this day, this had a price change of $1.07. The gap was minus 32, which means it gapped down at the open compared to the prior day. The price change, the percentage is 575, closed in the upper end of its range. Now, if this is below 66, I believe this will be yellow, and if it closed in the lower end of the range around 33, it would be red. And volume is heavier than normal. So here's the estimated volume. Of course, this is Saturday, and here's the 90-day moving average volume. So there is strong demand for this stock. Here's the RS ranks, and this, of course, is just a 1 day. Back here, there was an effort to rise, a no supply test, and then it took off yesterday. Now, if I go over here to this view, on the demand supply, you can see that this is a dark green line. It's higher volume, wider spread, which corresponds with this volume, wider spread, close very high here. I didn't put that in the description, but this shows this is strong demand. There was also strong demand here, and then a shakeout the next day. And then there was, this could be considered a hammer, even though the candle's not white, but it closed in the upper part of its range. And then it moved up from there. Now this is the weekly chart. I think it's important to have the weekly chart. I put this chart here rather than the chart which is now in what I call window number 3. Now looking down at this chart, this is a line chart, a daily chart, and it shows this is just a mess over here when we look at that. But if we look at the closes on a daily chart, it gives us a little better idea of rising lows, and this would be, at this point, would be a higher low when it broke past there. And I also decided that I would put the VPA flags on all of these charts. That way I can go from looking at, let's see, this one over here. I'm going to look at this one, and I can quickly look at the other signals on the other chart. Well, the weekly chart, forget it, that's going to differ. But on the daily charts, I can see where these signals occurred. This is not a this chart's just pretty sloppy to be doing this. Let's see if, I don't want Marin. Let's look at TempurPedic, for example. Okay, here is a no supply chart here. I can quickly see the no supply on these other charts, and that's why I included them. Same thing for the effort to rise. You can find them very quickly on the daily charts, and then you can see that this is confirmed on the weekly chart with an effort to rise also, and it's broken to a new high. Hard to see that sometimes on the daily chart, but the weekly chart, it shows up very clearly. Okay, now what I've done is I've given us an inventory of different charts, and I'll just go over here, and if I want the weekly line chart, I just drop down and choose weekly line chart. If I want the volume point of control 10, 30, and 90 days, I just drop down here. Notice that it took longer for this one to come up because of the visual filter back test. The 3 of them, that's why I moved it out of my primary layout. But if you want to look at this, it's here. I changed this to 6 months. It was on 2 years, and it takes forever to calculate even on a fast computer. So I think it's best not to have this chart up full time. And you can see that this stock TempurPedic, there was a lot of support on all 3 of the volume points of control. Here's the 10-10, here is the 90-day, and here is the 30-day. And if you look down at the bottom, you can see that all of them are green. Now if I scroll over a little bit, this is what it looked like on, let me click right here. This is 624. If you look clear down in the lower left corner, that is the right there, or you can hit your alternate I key and it's going to give you the date right here. Look, you can look at it very quickly. It'll also give you the values, which really don't mean much to you, except the price. Actually, these are the prices where they were on that day. That might be useful. So it's showing that there is strength again in all three volume points of control. If you look back here, you can see that this 90-day held steady for a long time. Now, if you want to see an indicator report, let me do it this way. I'm going to edit the current view, and let's go to the 90. Up here is what I'm looking for. And if I just select draw volume buckets, I'm going to be looking at the buckets for the 90 period, which is 90 trading days. And it's going to calculate that, and this is the longest point here represents 90 days. And you can see over these 90 days where the support and resistance has been or is currently based upon the 90-day volume point of control. It was just bouncing around through here, and if you scroll back across, you can see this changing for the 90-day. I don't know how useful you'll find this, but the program has the capabilities. Now I'm going to go back in, and I'll just click on 90 days here rather than opening up that other window. I'll deselect volume buckets. I did that just by going to edit the indicator. You can select any of these. Here's the 30-day, draw volume buckets, and it'll draw the volume buckets for 30 days. Go back to 30, deselect this, get rid of it. It just shows, where the strength and weakness is. Now, if you want to use other charts on here, this is price and volume daily, end of day rather than intraday. I'm going to move up here. So you can put these in any window you want to. And this would be the same chart as this, but there's different information in here. You can see it's going to be the same here. This is going to be intraday when you're looking at it intraday, but the end of day gives essentially the same information here. But I also included the 90-day volume and the industry percentage price change in this. I may be changing these charts. I'm not sure yet. But that's in there for now. Now, these other charts that you may want to use, this is a very useful chart. It's chart number 8. It's got the pivot lines on it. It's got the 3 and 6 crossover. It's got the fan. It's got the group. It's got pocket pivots. It's got demand based upon the 3, 6, and 18, and so on. And here's your volume point of control here. Now, if you want to use it over here, this is chart number 8. Just have chart number 8 in there, and you have all kinds of options for using different charts. I wanted chart number 2 here, but my basic layout is charts 1, 2, 3, and 4. So let's look at number 9 here. This is the expansion, a contraction chart. It's just got the 3 versus the 6, and the 6 versus the 18, and the VPOC, and the pocket pivots. And this one shows not only demand. This is a demand chart, but supply chart. You get the different colors for when the chart is negative based upon these Wyckoff indicators that are in the program. I don't know how useful that's going to be, but that's in there now. Like I said, I may be changing this. Now, these charts that I currently have up should come up relatively quickly because this one has VFB in it, but it only goes back 6 months. So you can see that I can flip through these quickly on this chart or on this computer and get a feel for what's going on. You can see how quickly they come up, but you don't have to use all these charts if your computer is relatively slow. In fact, if I want to get rid of these two and just use the daily and the weekly, then it's very fast. And then if I want to bring them back, I just click on new charting window, and then I select number 3, and number 4 is already in here. Another thing is that once you get your layout, close the program and everything disappears, and then click on HGSI, and you're going to get the charts to come up immediately. And then I just go into number 1, number 2, number 3, and number 4 is already in here. And that is very quick to populate the charts. Now I don't have any information in here because I closed the program, but if I go back up to the main menu, even though it's a Saturday, I can select Update Intraday Now because I have Thinkorswim running in the background. This also works with the other data provider. I think it's called Financial Modeling. It doesn't take long to update this information either during the week or on the weekends. Okay, and then everything's being redrawn. That's it. It's done that quickly. And I can prospect. Now let's do something here. I'm going to go into Wyckoff Demand and Supply, Demand Scans. I'll do demand scans with VPA flags, and I'll do this end of day. Sort on raw combo, which is already there. I'm not familiar with this stock, but you can see that the volume is very high, the spread is wide, but the close is mid. If I bring this up, and I can look over here at this candle, and you can see that the demand volume is very high. The spread is very wide, but the close is mid. So what has happened, obviously, is a gap up. And you can see the gap was 12.43%, so heavy demand. But by the end of the day, there was profit taking. So on Tuesday, when the market opens, you can look at this stock just by going into the intraday version of this, which is 1A, and seeing if there's any follow through. Let's look at another one here. Let's go to Gartner. This one closed very high. I can also see that the days since the 13 crossover is 14 days ago. Same for the VPOC, so we should have a decent trend going here, and we do. Volumes high, wide, very high, sentiment bullish, which corresponds, these three correspond to this. We can see that there is a little gap down. If you look closely here, you can see it gapped down a little bit, but it changed. The price change was $5.26. The intraday percentage change was 2.12, and the volume on the 20, 50, and 90 was above average, and the average volume is 671, and it traded over 1 million shares on Friday. Here's your RS rank. So this is a nice chart, both on the weekly, obviously, and the daily. And the demand is there. We know there's more demand than supply. This area here, I'm going to draw a frame around this. it gapped up here, and then it really didn't start moving out. Well, actually, this area right here, it broke out of this area here, but this could be considered what Wyckoff, Anna Calling, anybody who practices the Wyckoff method or the volume price analysis method, this could be considered building a cause. So here's the cause, and now we're seeing the effect of that cause. It was storing up energy, and it broke out, and there it goes. The weekly chart shows several areas here. This is a cause. This could be considered a cause, and this could be considered a cause between these areas. And then the demand is here compared to the supply, and this is the effort, and this is the result. So those are the three Wyckoff principles explained right here in each chart. So if we start looking at this information, all these charts, and I need to do a better job myself. It's all here now. You can see the demand based upon the Wyckoff bars here. Here was a demand bar. This was a lack of supply bar, but it was still going up. And then the line chart showing a series of higher highs now. And here are your efforts to rise. So a lot of information here. This is the plan to or the reason I'm putting this together, to try to draw conclusions based upon the Wyckoff method, and it's all here in the software. Okay, that's all I'm going to say today. What can you say about the market? It continues to go up, especially the S&P. SPX, I believe, is out to a new high. The NASDAQ is, well, I'm sorry, I said I was going to quit. Let's take a quick look here. Choose the group. Going to go into my user groups. I'm going to go into the market analysis groups, Major Markets Plus. I'll click on that. And then I need to switch views down here. And let's just make this. Okay, gasoline we know is trading at a high. I'm looking for the SPX. There it is. Here's the weekly chart. There's no volume here, so these don't mean anything, but you can see the line chart, or these bars don't mean anything because there's no volume associated with this, but it's out to a new high. Now let's take a look at the NASDAQ composite, out to a new high. And this is a useful layout for this too, as you can see. And let's look at the NYSE. It's very close. And by the way, there are ETFs in here, the Innovator IBD Fund, the breakout opportunities. If I bring these up, not so good, huh? This is the IBD Fund, breakout opportunities. It doesn't look that great on these, and these are put together by a third party. I don't know how up to date they are, but I put it in here just for evaluation purposes or comparison purposes. In fact, I'm going to show you one more thing here, and then I'm going to go. I've got several ETFs in here in the Major Market Plus. I have the ARC ETFs just so they're easy to find. You can see how useful this layout can be for this. So now there he is. The volume was quiet yesterday. It closed down a little bit. So what are we running into here? We're running into a supply issue on this. I got sidetracked here. Let's go into this. Here's my market analysis user groups. And if you come down here to the IBD 50 and the IBD breakout, like I said, I do not know how current these are because they come from an ETF, which is maintained by somebody else. But if you want to see what the individual stocks are in here, it's all there. I've updated the all stock, institutional, large cap, mid cap, and small cap. Did that today. So everything is current. That's it. I'm going to quit talking and move on. Have a safe 4th of July weekend, and I will plan on doing a webinar on Thursday. I'm not sure of the time, if it's going to be early in the day or later in the day, but I'll definitely plan on doing that unless something comes up. If so, I'll notify you. Thank you.